So there's a guy on Bloomberg who's basically a trader, been in the gold market for like 12 years, was on Bloomberg and told them, he said, look, I've seen gold and backwardation once in my 12 years. And when we see that, there is a big boom in gold to the upside. And he said that at his trading desk, his company themselves tried to buy gold when it was between $1,200 and $1,250 at the absolute bottom, recently or whatever. And it has now been 8 weeks, and they still have not received their gold. 8 weeks in waiting, still can't find that gold. It's coming, trust us. We know you put the order in, we got it, just bear with us. Right. They don't have the gold, they never had the gold. The numbers that they give us are absolute accounting fraud, like you can't believe. Which is why the other day I did the video about JP Morgan having to borrow a little piddly, almost 6,000 ounces from the HSBC vault. I'm talking COMEX vaults. And yet at the same time, I think JP Morgan showed that they had like 40,000, or roughly anyways, 40,000 ounces of gold in that vault at that time. So why would you need to borrow 6,000? Possibly because it ain't there. Or maybe even though those numbers say it's there, it's already accounted for. And when I say it's accounted for, I mean like some of their pals it's accounted for. Therefore the numbers could be legit, but it's already spoken for. So when anyone else starts demanding delivery for their gold, delays start kicking in. And this guy was on Bloomberg on video saying it, that they placed an order back 8 weeks ago and still have no gold to show for it. Still have not received it. They bought in at the low, capitalized on that particular movement. Of course, they can't wait to get their hands on it now because it's already past the 1,300 mark again. As you saw yesterday, a nice rally in gold and silver while the markets were tanking. That's another thing that is very interesting, because for the longest time now, when they slam the markets, they also slam gold and silver a little extra heavy duty, more than the markets are tanking. So, hang on. So when they slam the markets prior to, for the past year and a half or so, gold and silver go down, and usually go down a little more heavier duty than the markets are going down. So yesterday, the markets are all seeing blood red, a pretty decent amount, as a matter of fact. And that's when I expected to see, gold and silver start to get slaughtered. And both of them were up significantly. And when I did that video yesterday about silver being up 20% over the last, roughly a month, including the high for yesterday, I recalculated it, it's closer to 26%. So, I think the low was like $18.17 or something like that. And yesterday was like 23, I don't know the exact amount, 23.15 or 23.17. So I did a little calculation. It's like, oh my God, that 20% is not accurate. Silver has risen closer to 25% in the past month. And again, if this thing is in a bubble and it's done, it's deflated, we told you, stay away from it, precious metals aren't worth it anymore, why in the hell did silver just rise 25% in roughly a month's time? Reason being, short squeeze. So, I'm going to do another quick video to tell you what a short squeeze is.